If you run a security installation business in Australia, your costs hit before your revenue does. Cameras, access control systems, alarm panels, cabling, and labour are all paid up front or within short terms, while clients, particularly commercial and government clients, often sit on invoices for 30, 60, or 90 days. That gap between outgoing and incoming cash is a familiar pressure for security installers, and it is why the right finance matters. Here is what is available, how it works, and what you can realistically borrow. Security installation businesses tend to struggle with traditional bank lending. Your revenue is a mix of project income and recurring monitoring contracts. Your equipment costs are significant relative to your margin, and banks often want to see commercial property equity before they get comfortable. Non-bank lenders look at your actual trading performance and cash flow rather than trying to fit your business into a standard template. Unsecured business loans are the most accessible option for security installers needing quick access to working capital. You can borrow between $10,000 and $500,000 without pledging property as collateral. The lender assesses your last 3 to 6 months of business bank statements and your average monthly revenue. Approval can come through in 24 to 48 hours. For purchasing equipment stock ahead of a large contract, covering wages through a slow period, or bridging between invoicing and payment from a commercial client, unsecured finance is often the right fit. Equipment finance is worth considering for vehicles, installation tools, testing equipment, and larger capital items. The asset is the security. Rates are lower than unsecured loans, and the structure is often more tax effective. If you are investing in a new vehicle or specialist equipment to expand your service offering, equipment finance keeps your property free and your working capital available. A business line of credit works well for security businesses with ongoing recurring revenue from monitoring contracts alongside irregular project income. You draw what you need when costs arise, repay when client payments land, and only pay interest on the outstanding balance. For businesses managing both project and recurring revenue streams, a revolving facility provides more flexibility than a fixed term loan. Invoice finance is particularly relevant for security installers working with commercial property managers, strata companies, government bodies, or large corporate clients on extended payment terms. You advance up to 85% of outstanding invoice value immediately after issuing the invoice rather than waiting out the full payment cycle. The invoices are the effective security, no property or assets required. How much you can borrow depends on your monthly revenue and how long you have been trading. A security installation, business turning over $300,000 annually, can generally access $30,000 to $75,000 unsecured, with clean bank statements and no significant credit issues. Businesses with longer trading histories or property as security can access more at better rates. Most non-bank applications take under 15 minutes online with your ABN and business bank statements. A commercial finance broker can identify the lenders most suited to your profile before you apply. Brokers are paid by the lender on settlement and do not charge you directly. Use the free Business Loan Finder or Reliable Business Tools to find which loan type suits your security installation business. 6 questions, a clear recommendation, no credit check, and no obligation.